Welcome back. We are now in chapter 17. This is the last chapter of this course. In this chapter, we'll be presenting you a checklist for credit proposals. So far in the previous chapters up till now, we have discussed all aspects of credit appraisal, starting from a working capital, starting from term loan appraisal to a working capital assessment and ratio analysis. We have considered 4 to 5 case studies, which have provided a comprehensive coverage of the various credit facilities, various appraisals that you need to be aware as a credit officer. So in this final chapter, we'll provide a checklist. So whenever you get a credit proposal, now this is not just regarding financials. Okay, till now we have focused more on the financials part. But when a proposal comes to you, there are other aspects you need to look into besides financials. Say for example the credentials of the promoter, things like that. So what are the documents that you need to collect, right? What are the aspects that you need to look into besides financials, right? When you get a credit proposal, what are all the points that you need to look into, right? The points will be separate for term loan, it will be separate for working capital. Some points will be common for any proposal. Okay, so we look into all aspects. Okay, it will help you if you could take a printout of this checklist, keep it by your side, at your desk when you receive a new proposal. So when you receive a proposal for processing, so this will cover most of the cases. I would say it will cover around 90% of all your requirement in most cases, right? So the balance 10% could be about company specific details. So it's like these are common points across all companies, but there might be some company specific documents or points that you need to look into that might vary from company to company. Let's say for example a company is into trading, importing, right? From a foreign country, say for example from Indonesia, right? Say it reaches an Indian port, and from there the sale will be a domestic sale, right? Here there is no processing; it is just trading. Okay, this company will not be having any factory because it's not engaged in any processing activity, but still it will require a place to store this the material received from abroad. Okay, so it could be a go down, but say somewhere in the port premises, maybe it can take a place for rent. There could be some arrangement for storage. Okay, so for this company, this is a special point, right? So what we'll cover is the common points for all companies, but there will be some company specific points which you need to look into, and that cannot be covered because it varies from company to company. Similarly, for some companies there will be some group companies, right? And it is common for all group companies are engaged in the same activity. They'll be located in the same premises, right? So even though they show it as a separate company, three are separate companies, they might be operating from same premises. And in this case, three companies might be operating from three different bankers, right? In this case, it's very important for the stocks to be segregated separately, right? Because you need to arrive at the DP with respect to the stock of this company only. But maybe these companies are providing a common storage for the stock, but that is not allowed, right? The stock has to be clearly segregated. So these sort of things are company specific factors which you need to look into, right? What we will provide in this checklist is a common set of points that applies to all companies. Okay, but please remember there will be some points that you need to look into on a company to company basis, right? So there will be some basic data or enclosures that you need to obtain, right, for any proposal. Okay, so something called pre-sanction unit inspection report, right? If you are a branch, you need not obtain this. You have to prepare this, right? But if you're a zonal officer head office, you need to obtain this from the branch. Okay, so this is a enclosure that need to be submitted for sanction to higher authorities. First of all, is the unit functioning or not, because that is important. You don't want to be financing to the unit that's not functioning, right? Then whether there is any labor unrest, right? Then it will be commenting on the stock position. What is the level of activity? Is it brisk or not? So there will be a format for each bank, right? You need to fill this. So this is a basic enclosure that need to be submitted in the proposal. Then there will be something called credit investigation report or due diligence report. So both look into the credentials of the borrower, their capacity to run the business, what is the market opinion of the borrowers, right? Again, this is a format that varies from bank to bank, but it's a document that you need to enclose to while submitting to the higher authorities, right? Manager valuation and inspection report of collateral securities. See, for branch sanctions, many of these will not be applicable. Okay, many of these statements might not be applicable. So let us focus from a circle office or zonal office point of view or head office point of view, for which papers need to come from branch. Okay, so we'll focus on this sort of setup, right? Because for branch sanctions, many of the points might not be applicable. So let us focus from this point of view. Okay, so while submitting proposal to your zone officer head office, what are the points, what are the enclosures need to be submitted? So pre-sanction unit report, credit investigation report, manager evaluation. So manager evaluation, inspection of collateral securities is this is besides the engineer evaluation report. Now engineer evaluation report is by a independent professional, engineer empaneled on the bank, is an empaneled engineer, but manager also has to give his independent opinion on the value. This is something banks insist. Okay, so say for example the engineer has given a value of a property to be around 40 lakhs. Now manager, there will be a separate format called manager's valuation report. Now, the manager also needs to provide his independent, he has to make his independent inquiries and arrive at the what could be the likely market value of this property. Okay, there will be so he'll be separating a separate paper, that will be a separate document independent of this valuation report. Then if any security is agriculture, then obviously there should be an approval for converting this agricultural land into commercial use. So that is an additional document you need to obtain when the when any of the security is the agricultural security, because banks usually do not take agricultural property, right, as security. Then you need to submit net worth statements of directors, the promoters, okay, and also the guarantors, right. So sometimes what happens is they will not be submitting the latest net worth, and it is a very common practice that credit officers, in the absence of net worth statements, they'll be using last year's net worth statements, but you have to insist on the latest net worth statement, right. So latest net worth statements, some banks insist on certification by a chartered accountant, but most banks take it on a self-declaration basis. Okay, so this is a net worth statement. Again, format will be separate from bank to bank, or there will be a format followed by chartered accountants. Basically, it lists out the assets and liabilities. What are the liabilities? What are the assets? Both mobile and immobile, primarily immobile properties. Any liabilities. Okay, so that they will be arriving at the net worth for the individuals. If there is any corporate guarantee by a company, say a group company, then you have to obtain the audited balance sheet and arrive at the net worth from the balance sheet, and that will be the net worth. Right? For individuals, it will be based on a net worth statement. If there is a corporate guarantee, if there is a corporate guarantee, it will be the net worth will be based on the audited balance sheet. Then IT returns of promoters, directors is something which banks anyway insist. Last 3 years IT returns have to be submitted. Then the process note has to list the latest outstanding. Right, process note is anyway standard format, so it will one of the columns definitely will be what is the latest outstanding. You have to present the latest outstanding along with, if it is a CC account, the latest DP. If it's a term loan account, it should having the latest overdue, right? And in overdue, the breakup should be given between what is the installment breakup and what is the interest breakup, right? So don't just say for example your bank might have the format may be facility wise. This is facility 1, this is facility 2. What is the limit? Say 10 lakhs. So what is the outstanding? Say 9.4 lakhs. Then what is the DP? So this is 11 lakhs. So the term loan here, say for example the outstanding, this is a 20 lakh term loan. Say the outstanding is 19.11. Now if there is overdue, you list the overdue here. Okay, say for example 2 lakhs. And then even though your bank format doesn't provide for the breakup of overdues, you have to keep an indicator like star or hash, and then below the table explain what is the overdue. This is something which your higher authorities or sanctioning authorities like a lot. They don't want this just saying the overdues. They'll be interested in knowing what is this overdue, how old it is it more than 3 months, what is the age of this overdue, so that they can take a call on whether to sanction the limit or insist on recovery of this dues before sanction. It is latest overdue, say a week overdue, they might ignore it, okay, and stipulate it as a predisbursement condition. So as a credit officer, you should be giving the maximum information to the sanctioning authority. So if there is an overdue, please indicate below the breakup. So what is the interest breakup, what is the installment breakup, and to which months it pertains, last month or last 2 months, okay, just inform, okay, that will be a good information. Then any proposal has to be accompanied by the last 3 years balance sheet and the latest provisional balance sheet. So please make it a point that whenever you take the audited balance sheets, the 3CD and the 3CB forms also need to be enclosed, okay, along with the auditor's observation. Then the latest provisional balance sheet, this is sometimes you might miss, right? Sometimes borrowers will not be providing this. Say for example, it is now October 2014. So the company will be submitting audited balance sheets of 12, 13 and 14. So these are available. Right, but then from March 14 already, since it's October, more than 6 months have passed. So sometimes, banks in these cases will be insisting on provisional financial statements. They'll be saying the latest available financial, that is March, is a bit old. It is more than 6 months. So please submit your latest financials. They need not be audited. These are a provisional figure. So say for example as on September 30, 2014 or June, right? So banks will be insisting. Now it is possible that the company will be saying it's not ready. Usually you'll be encountering a number of cases where the provisional balance sheets will not be submitted, but you have to insist on it, okay? Because if the financials are very old, it will not serve any purpose, okay? Especially what is the performance in the current month, it will be available from the provisional balance sheet. Having said that, you have to be very careful with provisional balance sheet because this is not audited. These are financials submitted by the company, and there is a scope for presenting incorrect figures. Say turnover could be shown in a very positive way, even though there is no actual turnover, right? Profitability, current ratio, everything can be manipulated, okay? So you need to be careful. You need to cross check with other sources, right? Don't take this blindly, but you have to insist on submission of provisional balance sheet. And then CMA data, obviously this is the basic document which you require for any CC limit or term loan till closure of loan. CC limit for the next 2 years is sufficient, okay? So CMA data, we seen what is the format. So banks will be submitting usually they'll be submitting application and as an enclosure CMA data, okay? So this will be in the bank format. This is the general format CMA data. So you need CMA data for the next 2 years in case of working capital limit. In case of term loan, anyway, whatever is the repayment period, say for the next 7 years is the repayment period. So projections for the next 7 years have to be submitted. Then month-wise sales is something party has to submit, right? Say for example it is July 2013, then the March balance sheet anyway, say for example provisional balance sheet as on March 13 is available. Then from March, April, May, June, July, these 4 months, what is the month-wise sales? This is something that has to be submitted, month-wise sales and production figures. Then if it's a consortium account, minutes of the latest available consortium meeting has to be submitted. If the company has come for enhancement or renewal of working capital limit, then there has to be a latest consortium minutes regarding the meeting where this proposal was discussed. So the consortium has to approve, right, that they approve the MPBF, okay? So those minutes has to be enclosed in case of consortium accounts. Then in case of consortium accounts, also the position regarding execution of power policy agreement has to be mentioned in the process note. If it's come for renewal, it means last year 1 year has passed. Say for example it is 12 March, the company has come for enhancement of limit. So it means somewhere back in 2011 prior to March, okay, since 6 months will be an NPA, okay? So the company must have come for renewal. So since 1 year is over, usually the power purchase agreement must have been completed, but still, right, there might be cases where it is pending. So try to confirm that the power purchase agreement was executed. Then wherever applicable, collect the orders on hand. This is especially important in case of contractors, because basically in case of contractors all we rely is on the works on hand. The assessment is entirely based on the orders on hand. So get the orders on hand. Credit rating report wherever it is applicable. It might not be applicable in all cases. For small parties it is not insisted, but wherever it is applicable you have to insist on it, okay? Then if a company has got a group firms or sister firms, okay, these are companies where there is a common management or significant controlling interest is there. This will be group companies. For those group companies, say for example your borrower is a proprietor, is a partnership firm. It's got 3 partners, and say one of these partners is a proprietor of some firm. Say another partner is a director in some company, okay, another director is a partner in another partnership firm. So all this will be considered as group companies. Now you have to, for these group companies individually, what you have to obtain, all these points you have to obtain. You have to obtain the last year's balance sheet, audited balance sheets, who are the bankers and what are the limits they're availing from those bankers, and whether they are in order. That is, get the latest outstanding, right? Don't get very old outstandings, okay? Then you have to get the overdue position. Credit opinion report is usually insisted for group companies, okay? From their banker you have to get the credit opinion report, and then the consolidated profit and loss account and balance sheet of the group as a whole. All this you have to insist if the company has group accounts. Then in case of companies, the company has to submit certificate of incorporation, memorandum and article of associations. This is usually obtained in case of if the borrower is a new borrower to the bank, okay? If it is a renewal, once it's an old borrower, we will not insist every time, right? But if it's a new account coming to the bank for the first time, right, you will insist on certificate of incorporation, memorandum and articles of association. In case of partnership firms, you insist on partnership deed, okay? And for companies, you have to also get the shareholding pattern and the top 10 shareholders. So shareholding patterns basically is the breakup of shareholding between who promoters hold how much, associate companies hold how much, that breakup will be provided. The top 10 shareholders in terms of number of shares, who are the largest shareholders. So these two you have to get in case of companies. Okay. Then you have to check the defaulters list for the names of the promoters and the guarantors. You have to check various lists. This is provided by your bank. Right? This is not a public document. These are not public files. These are available by banks, circulated by RBI. So there will be something called caution list, defaulter list, willful defaulter list. CIBIL is accessible to outside parties. ECGC sale. Right? All this you have to check for the names of the whether any promoters or directors, guarantors are appearing. And in case there is a similar name, it could be possible that it is based on similarity of name. It could be possible sometimes. In that case, you have to get a notarized affidavit. This could be sometimes done after sanction. It is stipulated as a pre-disbursement condition sometimes, but at least you have to ensure that at some point of time you have to get this notarized affidavit confirming that the concerned promoter or director is not the same person. Okay. Then CIN, DIN, basically to mention in your process note. This you don't need not get from the company. You yourself can go to the MCA 21 website and get this. Right? If you enter the name of the company, if you search for the name of the company, you'll be getting this, getting the CIN, and DIN is also available in the MCA portal. So this you have to make a note in the process note. So those are the basic documents that you need to get from any party while processing a credit proposal. So that is a basic checklist. Okay. So then once we look at this, we go on to the financials part, right? So financials entirely we have discussed throughout the past videos. We have discussed a number of points regarding financials, ratio analysis. So we are not going to repeat anything on that, but special mention needs to be made in your process note, because your process note will be having some point regarding comments on financial position. Somewhere your process note will be having a section on comments on financial position. So financial position summary table will be indicated as per your bank's format. So last 3 years, say sales, profit, current ratio, so various parameters. This is a format will be having as per bank, individual bank, right? And below that you have to furnish your comments, that the processing officer has to furnish the comments. So in those comments you have to specifically mention a couple of points. One, regarding turnover and profitability, and in particular, if the turnover has decreased compared to previous year, you have to be very clear as to the reasons why it has declined. Either turnover or profitability, you have to make a special mention. Second, you have to compare the actual turnover with the projections given at the time of last year's renewal. How much it has achieved. Say the projected turnover is not achieved, then you have to justify the reasons why it has not achieved. Because in case it is not achieved, then there is no point in utilizing the entire limit, right? So company has utilized the entire limit, whereas the turnover is not up to the mark, so that's not a positive sign. So that you have to mention the reasons for not achieving the targeted turnover. Then you have to also make a comment on the NWC, and if you have observed any diversion of funds. Okay, so that's a very serious issue. So if your fund flow statement has signaled any diversion of funds, you need to comment on that. Then if there is any fixed assets increase without corresponding increase in long-term funds, because fixed assets have to be purchased, have to be sourced from long-term funds. Otherwise, it amounts to diversion of funds. So if you observe that the gross block has increased, right, whereas you're not observing a corresponding increase in long-term funds, then this might point to diversion of funds. Then that also you need to comment on. Then one more thing, we've seen how to calculate current ratio, TOL by TNW, important ratios. So when calculating TOL by TNW, investments in group companies have to be deducted from net worth. Okay, so for TOL by TNW, in TOL we take total outside liabilities, that is the current liabilities and term liabilities all put together. Okay, in TNW we consider the share capital plus reserves and surplus, right? So in case the company happens to have some investments in group companies, okay, so that will be appearing under non-current assets. Okay, investment in group companies, so that you have to deduct from TNW. Say for example TOL is 500, TNW is 100, so TOL by TNW is 5. Say the bank norm is it has to be below 6, so this is okay. But if this 100 happens to include say 20 lakhs investment in group companies, then the TOL by TNW will change to, TOL remains same 500, by TNW will be 100 minus 20, so it will be 500 by 80. Now this is greater than 6. So this adjustment you have to make. Why we are making this adjustment? Because this is, even though the borrower has brought funds, that fund, the part of the funds, this 20 lakhs, is not in the business of this company. It is elsewhere. In an extreme situation, right, if the borrower has brought say 100 lakhs capital, and 99 lakhs is invested in some group company or some share market somewhere. And in this business, the particular business where the bank has lent funds, he is keeping only 1 lakh. And against this 1 lakh, the bank has sanctioned 50 lakhs of CC, right? 25 lakhs of term loan. This is a very dangerous situation. Of course, this is an extreme case, but the point is, if some of the capital is invested in group companies or elsewhere, that you have to take it out of the net worth. So that adjustment you have to make. That's the adjusted net worth. Okay, so that's the adjusted TUL by TNW. Then one more thing you have to be very careful is you have to get the last year's sanction and see whether there are any special conditions which are uncomplied even now. That is after 1 year. At the time of last year's renewal, definitely there will be some uncomplied conditions which the bank might have said you comply with this by so and so date. Now, if they're uncomplied even after 1 year, that's a serious issue. So you have to get the last year's sanction. Last year's process note anyway you will get, and you will see the turnover and whether the company has achieved or not. What are the projections? That is one part. But sanction letter and the conditions is another aspect. So you need to look into both the process note and last year's sanction letter also. So in the case study on XYZ, if you recall, we have seen the points that you need to look into when a term loan is sanctioned and we are reviewing it. This is a recent term loan 1 or 2 years back. So what are the points in such case? We have discussed that. So please keep in mind all those points. Okay. Similarly, when working capital limit is renewed or enhanced, you have to see. We also seen a case study. What are the points you need to look into? Okay. So those are from the financial angle. Okay. But sanction wise, there will be some additional points. Okay. Say for example, one you are looking at special conditions. Branches will be issuing something called certificate of compliance. Okay. So before the process in banks is like before release of the sanction limit or enhanced limit, branches will submit to zonal office, the controlling office or the regional office, that they have complied with all the sanction terms. Okay. So based on the certification, zonal office will be permitting release. Okay. If you are new to the banking industry, this might seem a bit strange, but sanction letter itself is not a go ahead. No, sanction letter itself is not a go ahead. Okay. So once the sanction is obtained, branch will have to comply with certain terms and conditions as per the sanction letter, and then it has to confirm to the zonal office that it has sanctioned. Then zonal office will be giving permission to release. So there is a process involved. So if you are in a zonal office, you will always be certain that the certificate of compliance of sanction terms for the last sanction is on record. Okay. Then if there are any uncomplied, non-complied terms of sanction, it is possible that zonal office might have permitted release pending certain sanction terms compliance. That is possible. From a practical point of view, maybe some conditions were not, the company could not comply, and zonal office still has permitted release. So those non-complied terms of conditions, right? Those you have to be make a list and ensure that they are complied now, or at least again you have to repeat in the present sanction. You have to ensure that they don't skip away. Just because it's a new sanction, don't let the last year's uncomplied terms to go off. At least ensure that they are complied right now, or at least repeat them in this year's sanction, right? But never let them go off. Okay, because once you let them go off, you are not going to catch them again, right? Then there will be something called legal audit report of last year's sanction that needs to be on record, and any pending issues in the legal audit report has to be complied with. Then in case of consortium accounts, joint documentation is executed or not. So if you are assuming that the company has come for renewal and enhancement, maybe 1 year has passed. So in all probability, joint documentation could have been must have been completed. But still ensure that. And also in case of consortium accounts, whether pari passu charge is created, right? So we have seen that pari passu agreement earlier, so that needs to be ensured. Then certified copies of title deeds and search report should also be on record. It's important from the property security point of view. Then in case of companies, you have to ensure that the charges are filed. We have discussed in chapter 16 credit concept something called format. Okay, so you have to ensure that format is filed. Okay, so this ensures the charges are registered in favor of the bank, and that you'll be confirming by the search report. Okay, so this you can get from MCA 21 by yourself, or it's preferably you get it certified by a chartered accountant. Okay, then when you get a new proposal, there will be some monitoring issues also, right? So since the last sanction, there will be a number of developments in the account, right? You have to ensure that all the monitoring issues are attended to. So usually there will be inspection in the account in the last 1 year. Now this inspection could be a regular inspection by your head office, or it could be a statutory auditor, or sometimes RBI inspection will also happen. So there'll be various report inspection comments. So point wise rectification that has to be included in your process note. Okay. So at least if not rectified, at least what is the status of compliance? What is the present status? You have to make a note of. Then whether MSOD and QA statements are being submitted promptly. Maybe not applicable for all accounts, but for large accounts, a minimum cutoff, say bank has stipulated above 1 crore, MSOD QS needs to be submitted. So then you have to make a note in your process note whether they've been submitted promptly. Okay. Then whether stock statements are being submitted promptly. Then if stock and receivable audit is applicable, then process note should also mention what is the status, whether it's completed or not. And if it's completed, you have to provide a review and any adverse observations whether compliance is done or not. Then status of rectification with respect to adverse comments made in other reports. What are these other reports? Short inspection report, concurrent audit report. Okay, there will be monthly monitoring report for large borrowers. So any review report, pending issues, you have to make a note during the last 1 year. You have to consolidate and inform in the process note. Okay. Then in case of consortium accounts, multiple banking accounts, RBI has stipulated something called exchange of information that needs to be done. So you have to confirm whether it's done or not. Then if credit rating has declined due to some reason, the reasons have to be informed. Say for example, credit rating last year was A, now it has declined to B. So why it has declined, you have to make a special note of in your process note. Then if a term loan was sanctioned and the project is under implementation, then you have to inform the progress of implementation. If the project was completed, we have seen a case study XYZ where we have seen what are the points you need to look into, but the project is still going on. Say the term loan was sanctioned just 6 months back. Okay. So now when the company has come for renewal or enhancement of working capital limit, the term loan project is still under implementation. So in those cases, what you have to look into, you have to get what is known as the there'll be a separate format known as project implementation review report. Okay. Project implementation review report is an internal bank format, and the format varies from bank to bank, but basically it will be trying to assess what is the envisaged project cost, or how much is completed till now, and what is the balance to be done. Then out of this completed, how much was incurred, how much was sourced from the promoters, how much was one term loan against the envisaged. So that comparison will be provided in the format. So you need to get that. So you also need to comment on the project whether it's progressing as per schedule, what is the envisaged decision, whether it is likely to be achieved or not, and whether the promoters are bringing in the required margin. All this you have to comment upon. So term loan proposal, there are a number of points that we need to look into. We have already taken a case study, right? We have seen what are the points that you need to look into for a fresh proposal. I'll just run you through the checklist required for term loan proposal. So first of all, you have to check the eligibility. So we have seen how to calculate the eligibility. So item wise, there will be margin stipulated by the banks. Okay, so that we need to look into and arrive at the margin appropriately. Then for large projects, you have to insist on techno-economic viability report. So we have discussed a lot in depth on the TV report. So you need to look into all this, including the credentials of the consultant. Okay, so this we have discussed earlier. Please refer back to the chapter of term loan appraisal, right, for TV study. Then you have to go to the project report. The project report will usually include all the basic data required for a normal banker. Okay, for the normal processing of the proposal, profile of the promoters, location, everything will be having. Okay, including the financials. So this you need to go through, and you have to insist. So you have to insist for large projects. You have to insist on the TV report. Okay, then managerial appraisal you have to be done. Usually this is done in the credit investigation part. Okay, but you have to look into in the term loan in your process note also what is the past experience of the promoters, what is their technical competence, and what are the contacts they have. All needs to be looked into. Then if the promoters are having some group companies, you have to insist on the audited balance sheet, last 3 years audited financials, and also on the credit opinion report of the from the bankers of these group companies. In case it is not possible to get before sanction, at least stipulate as a pre-disbursement condition. Okay. Then if the promoters themselves don't have the experience, it is possible sometimes. Then as we've seen in one of the case studies, then you have to make a special note of the technical consultants, right, and the technical team the promoters are putting in. Okay. Then you have to have a market appraisal, right? This will be detailing what is the present industry scenario and what is the demand position like, and whether any particular challenges this industry is facing, right? What are the government restrictions? Those sort of things you need to address. SWOT analysis has to be conducted. This we have seen, and the risk assessment, and what is the mitigation proposed. You have to look into all this. We have considered earlier. Then you have to be very clear on the DCCO, right? This one in the checklist, this is the most important thing for a term loan. What is the DCCO the company is projecting? DCCO is the date of commencement of commercial operation, and you will be very careful because RBI classifies projects as NPA if the actual DCCO is, if the delay in the commencement of operations is more than 6 months compared to the actual to the envisaged to the estimated DCCO. So you have to be very careful. Monitoring needs to be strict. When the sanction has been approved and disbursement has commenced, you have to be very careful in the disbursement phase whether the project is progressing as per schedule, right? Right. All this we have discussed earlier. So in the checklist, so it's a very important point in the checklist. Whenever you get a project report, first look into the DCCO. What is the DCCO this company is projecting and whether it's achievable or not. Okay, so take into account all possible delays that could happen. The sanction could take time. Okay, disbursement could take time. Okay, so please ensure that DCCO is practical. It could be achieved in spite of some delays, right? Then if the loan is for expansion of capacity, then you have to mention the process note, the existing and the proposed capacity, right? And if it's for a modernization purpose, what is the advantage the company will be what the company will be having if this project is completed. Okay, then installed capacity you have to mention, and besides installed capacity you have to mention the capacity utilization and ensure that it is reasonable. As discussed in earlier chapter, don't project a very high level of capacity utilization, especially in the initial years, because that might not be achievable. And in case it is projected based on this capacity utilization, in case the profits don't materialize, your repayment could be affected. Okay, so please be conservative while projecting the capacity utilization, especially in the initial years. Then you have to comment on the technology. What are the contemporary alternatives available, right? And reason for choice of this particular technology needs to be mentioned. Then location, you have to comment what are the location advantages for situating this project in this particular location, and whether are there any challenges in this location, and how the company is going to overcome them. Those needs to be mentioned. What happens sometimes is the location of the unit will be very far from the branch where the bank branch where the limits are applied. So in this case, you have to provide the justification why this is being done, right? It's not that it cannot be done, but justification needs to be done because monitoring might be difficult once the disbursement starts. Okay, so the reasons why this is being done has to be informed in the process note. Special note on the power connection, electrical line, the backup arrangement might be required for some industries. So please make a special note of that in the process note. Also, water, manpower, sources of raw material, all these are important. Those needs to be mentioned. Then when it comes to project cost, right, this will be provided in the project report. You have to project cost. One thing you have to be very clear is not just the tangible assets, that is the land, building, machinery. Not only this, even there will be other items in the project cost like preliminary expenses, IDC, industrial and construction, contingencies, margin for capital. Every item should be included. Okay. Sometimes what happens in the project cost only, especially for small borrowers, they will not be aware of the actual project cost. They'll be including only the tangible part, but you have to insist on all the relevant items. Okay. Then in case of engineering and medical college proposals, what happens is a course is for 4 years, right? Engineering is for 4 years, or medical college is for 5 years. What happens is that if a new college has applied for a loan, say that is required for construction of first and second year facilities. So what happens is this borrower will be coming back again for subsequent years, because this is a 5 years course. It's an MBBS course, 5 years course. So even though presently you have sanctioned for the first and second year facilities construction, right? Subsequently in 1 or 2 years they'll be coming for the remaining facilities. Okay, third year, fourth year, fifth year. So what you need to do is you have to get a project cost, the likely project cost for the entire 5 years duration. If the course is for 5 years, you have to get what is the project cost for the entire 5 years. You need not sanction that entire term requirement. Okay, say for example they said it's 40 crores, they will bring in 10 crores and you sanction 30 crores term loan. This is for all the 5 years. But out of this, maybe out of the 40 crores, maybe for the initially they'll incur only say 15 crores for the first 2 years facilities. So even though you sanction only, say for example this will be met by 5 and 10, that's what they said, and they said we'll meet 3 crores from our funds, you sanction term loan of 12 crores. So even though you're sanctioning only 12 crores now, please get the project cost for the entire project, right? Because it's very important to ensure that whether the promoters can bring in the 10 crores margin as a whole. So for the present proposal, it might be only 3 crores. Can they bring in the entire 10 crores when required in future? The balance 7 crores, can they bring in? So if not, the project might be halted. and your funds, the bank funds will be blocked. So you need to get the entire project cost in the initial stage itself. Then in the case of means of finance, where it will be listing who is going to finance the project cost. The promoter side, you have to specifically comment on whether what are the sources from which the promoters are going to be meeting this project cost, right? So it's not just enough if they say the project cost is 10 crores. In the means of finance, they say term loan 8 crores and equity 2 crores. Just on a piece of paper on the project report document, they just can't say like this. Okay, so this has to be backed by something. So as a banker, you have to ensure how they are going to get these 2 crores. Are they credit What is the credit worthiness? Can they bring in 2 crores? What are the sources? Is this readily available? See, 2 crores need not be in the form of cash right now. Okay, all we're asking is, are they sound enough, financially sound, to bring these 2 crores? These 2 crores might be in various forms. Say for example, it could be in the form of shares or FD, or it could be in property, land or building which they're proposing to sell. Somewhere it should be there, these 2 crores. They can't say we'll start earning these 2 crores now. That is ridiculous. They can't earn the 2 crores now, right? So you have to look at the sources. So is it available in some form already, right? So you have to make a special note of that. So please make a note of that in the process note. Okay. Then also comment on the present status of project implementation. So even though the loan is not yet sanctioned, so the project implementation must have commenced, because the promoters who are serious enough will not wait for the a loan to be sanctioned. Okay, because because anyway they have to bring their margin. They'll usually start some work. Maybe they will start with the a land development and land clearing, small things they'll be usually doing. So get the latest status of project implementation and how much amount they have spent so far. You can also insist on a CS certificate if required, right? Otherwise, these two are enough. Okay. So what is the present stage? What are the works are completed so far out of your own funds, and how much you have incurred, right? So this gives you an idea of the commitment of the borrower. If it is a substantial amount that is incurred by the promoter till now, it is a comfort to the banker. It's a comfort to the bank in the sense that the promoters are serious enough. They have already brought in their margin. Now bank can start releasing the term loan. Okay. Then pre-sanction unit visit report is very important, because it will be giving an idea onto what is the actual physical progress, right? And it also gives an idea whether the envisaged DCCO is achievable or not, right? So that's why pre-sanction unit visit should be latest, right? If the sanction is taking a lot of time, it's always better to have a second visit also to get a hands-on information on the actual status of progress implementation. Then quotations for machinery supplies. If the project cost contains plant and machinery, you have to get the quotations from suppliers. And if there is any second-hand machinery, banks will be having the separate guidelines. You have to follow your bank's guidelines. Usually the margin will be higher, right? And usually, say for example, plant and machinery margin is 25%. Maybe for second-hand, the margin will be higher. Say banks will say we'll finance not 75%, we'll finance only 50%. That is possible. Okay, that could be one change. And also sometimes they'll be insisting on an engineer for certification from an engineer that this machine is in good condition and it can work for so many years in the future. That is also sometimes insisted. So you get back to your policy guidelines. What are the policy guidelines for financing second-hand machinery? So if the project cost contains civil construction, then you have to get the estimate from the engineer. What is the basis for the arriving at the estimated cost of construction? Then for construction, you have to get the plan approval and panchayat approval if it is applicable. And you have to inquire whether the land is owned or leased. Usually banks prefer a land to be owned, but in case if it is leased, you have to get a lease date, preferably registered. Then in a term loan project, since approvals are so important, right? Because a project could be put on hold if some of the approvals are not applied. So make a list of all the statutory approvals required and mention point wise what is the status. It doesn't matter if it's not received already, but if it is pending, just inform the status. What is the likely date of obtaining? Okay. Then if any reimbursement is sought, you have to mention specifically in the sanction letter. So the party will not be troubled at the time of disbursement. Branch can directly permit reimbursement. Then if there is a takeover, if the term loan is being taken over from some other bank, specifically the reasons why this borrower is shifting, you have to you have to mention, right? Because we discussed earlier that takeover is something that is seriously looked into during RBI inspections. Just you have to mention the justification why this borrower is shifting. Okay. Then anyway, projected profitability statements, projected balance sheet, projected cash flow. Okay, DSR calculations will be furnished. Then assumptions are very important. We spoke about this earlier. the list of assumptions that were made for preparing the financial projections need to be listed, and then you have to critically go through each and every assumptions and comment and say and see whether they are reasonable or not, right? And also see whether all the ratios, key ratios like current ratio, TLB, NW, DSCR, all are comfortable for all years under the projections. Sometimes there will be a lot of delay between preparation of the project report and sanction. Say for example, originally it was assumed that the loan will be sanctioned in October 12, but however it's already March 13. Say for example, it's already March 13, so there's a delay of 5 months already. Now you cannot base a sanction on this projected financials because all are irrelevant. See, had the loan been sanctioned October 12, DCC would have been started from April 13, and for the financial year 13-14, 12 months operations would be available. But now because of this delay, 12 months won't be available. Say only 6 months or so. So everything will change. Turnover will change. Everything. So whenever there's a delay of say three or more months, insist on submission of revised financials. Then look at the DSCR. DSCR should be above the bank norms. Usually it is 1.5, right? Ensure that it is greater than 1.5. Sensitivity analysis also needs to be done for large accounts. Say for example, there will be a cutoff like say 1 crore or 2 crores. Above a cutoff, you have to do sensitivity analysis, and DSCR should never fall below 1 in any of the years. Okay. Then repayment period, you have to be very specifically mention what the party wants. Whether it is monthly installments, quarterly or half yearly. Okay, what is the holiday period they want? Everything should be very clear. Your sanction term should very clearly stipulate this. Otherwise, because this will be used for calculation of overdues, right? Asset coverage ratio, break even, IRR, all we have discussed. So these needs to be incorporated in the process note. Then in the terms and conditions, banks will be having a standard set of terms and conditions, but don't stipulate just these conditions. Stipulate also some special conditions. This will be on a project to project basis. Okay. So if you find that a project needs to be sanctioned due to various reasons, maybe it's a big party, maybe there's a pressure from your higher ups, but you are not happy with it in the sense that there are some pending issues. Ideally, you would have wanted them to sort out those issues, but in case that's not possible, always make use of the terms and conditions because they can help you a lot, especially when the account goes bad. There are some if there is some accountability study. Okay, in accountability studies, if you stipulate some strong conditions, it's a great way of saving yourself. Okay, so in case there are any pending issues, always make it a point to include in the sanction terms and conditions. That shows that you have that you have seen the point, you have your appraisal was correct, and you have taken care to include in the sanction terms and conditions. Whether the compliance happens or not, that's a different issue. But as far as your job as credit officer is concerned, any pending issues, you make a list and include in the sanction terms for compliance. So those are the points that you need to look into a term loan proposal. Then when you get a working capital proposal, either renewal or enhancement, there are some points that you need to look into. First of all, you have to look at the turnover. So what is the projected turnover? Is it reasonable or not? Usually 10 to 15% is acceptable, but if it's an abnormal growth projected, then you have to get the justification. Why is the turnover so projected at a high level? Is it because the capacity is going to be increased, right? Or the company has secured a major order? What is the reason? Okay, because your entire assessment or MPBF will be based on turnover. Okay, then you also look at the last 2 to 3 renewals and see whether the company is achieving the target turnover or not. Now some companies just keep on projecting higher turnover, but they never achieve it. But if you look at the last 2 to 3 years of financials, and if you consistently observe that this company is always projecting higher turnover but never achieving it, right? So it's very likely that this year also they will not achieve the target turnover. So make it a point to look into the last 2 to 3 years projections and the achievement. So when looking at turnover is basically sales. Sales is quantity, how many units of product you are selling, and the selling price. Simple. So achievability of turnover is basically you have to break it down into quantity and selling price. So whether this quantity can be produced is this achievable, and is the assumed selling price reasonable. Say for example, the sale quantity is 100 tons and the sale rate is 500 per ton, then turnover will be 50,000. So now you have to ask whether the company can achieve this production, right? And whether the assumed sale price is reasonable or not. Okay. Then when you see the projected profitability comment, you have to ensure that this is achievable or not, especially in cases where NWC is negative, right? And the company projects the improvement of NWC based on retained profit. This we have discussed earlier, right? In one of the case studies. So whenever company projects improvement in current ratio by retention of profits, you have to be very, very careful. See that the projected profitability is achieved or not. What is the margin, profit margin they are projecting? What is the profit margin in the last 2-3 years? Is it on the same level, right? Please be careful on that point. So even though we said sometimes, even though we always insist on audited balance sheets, sometimes provisional balance sheets might be provided. Say for example, you are in June 2013. Since there is only 3 months since March ending, maybe audited financials of March are not yet prepared. But then you can't wait for the availability of audited balance sheets for sanction. So you might sanction based on provisional figures, right? But then you have to insist. You have to, after sanction, you have to follow up for submission of audited balance sheet. And then if there is any wide variation between the provisional financial statements, you have to call for explanation, right? Then excess drawals and ad hoc limit, you have to specifically mention in your process note how many times the excess drawal and ad hoc limit was availed, and what was the due date in each case, and when was it actually adjusted. This you have to implement because it points to the credit discipline. Okay. Then mention the latest outstanding, latest DP. Okay. Sometimes you have to be careful with the DP calculation. But branch will be giving some DP, but sometimes branch might not be calculating in the correct way. For example, they might not be subtracting sundry creditors. So there could be various issues. So also look into the calculation if possible. Even better, get a copy of the stock statement. Since renewal proposal, they'll be submitting a lot of papers. Just ask for a copy of the latest stock statement also, so you can calculate the DP yourself. Then calculate the credit submissions to check whether the company is routing entire turnover to the bank or not. Okay. Then if the NWC is below the bank's norm, right? There is a minimum required NWC that corresponds to current ratio of 1.33 or 1.25 as per bank norms. So if it is below the minimum required norm, then you have to get a plan of action from the company how it's proposing to improve the current ratio. What are the long-term funds this company is going to increase? Is it own capital or will it be raising unsecured loans? You have to get the sources. Then always check all the key ratios in the projections, not just audited, last year's audited, but also projections whether ratios like current ratio to EBIT and NW are comfortable for the coming years, right? And in case of consortium accounts, it's always better to wait for the later bank appraisal. Sometimes company will be forcing you to do the appraisal, and they'll submit the later bank appraisal later. But it is better to wait for later bank appraisal, right? Because if there is any difference in assessment, you have to comment on that, right? Usually in consortium accounts, you'll be following the later bank appraisal. But in case it's not ready, it's better to wait for it. Then in case of takeover, if the limit, this is the CC limit, okay, this is the working capital limit is proposed to be taken over from another bank, the reasons have to be specifically mentioned. Okay. Then if it's a contractor or a seasonal activity, then cash budget should be provided, right? Besides the projected P&L and projected balance sheet, you should also get the cash budget. This is a month-wise statement you have seen in the 4th case study. Okay, and then we'll be sanctioning the limit based on the peak deficit for any month. What is the peak deficit? Based on the peak deficit, we'll be calculating the limit. Then look into the holding levels projected, because this will be leading to the calculation of MPBF. If holding level is high, it might lead to a higher MPBF. So are the projected assumed holding levels reasonable or not? Each item, raw material holding level, finished goods, debtors, creditors, everything. Okay, just check for this. We have discussed in earlier chapters how to look into it, what are the aspects to look into. It's not that it should not be high. Say for example, raw material, usually the industry norm is 3. It's not that the company should not have 4 or 5 higher. All we're asking is justification, because company vary on various aspects. Say for example, the distance of this particular unit from the raw material source is very, very large. This is right. In that case, maybe it has to maintain a larger raw material. Debtors, for example, this company is industry, everybody is giving 45 days credit, maybe 45 days credit to the customers. So it should be 1.5 months. But this company is giving 3 months. It's not that you should not allow. It can be permitted. Maybe because of this, the company is getting more customers. We don't know. So all we are asking is if there is any a wide variation, call for justification. Okay. And also you have to compare the actual holding levels with the CMA submitted at the time of last year's renewal. Then you have to check for the DP as per the latest audited balance sheet. Because what happens is DP is usually calculated based on stock statements. Now it is possible the company gives a false figure in the stock statement just to get at a comfortable DP, right? So for the DP of March, for the stock statement the company submitted for March, compare it with the audited balance sheet, and in case you obtain wide variation in the sales stock, the stock level, then you can call for explanation from the company. So you have to look at the projected cash balance, cash and bank balance. This we have discussed. This should not be very high. The reasons why it should not be high we have already discussed. So please go to the relevant section once again. Then other current assets. It's sometimes possible that what companies do is they dump a huge amount of the other current assets, and MBBF will be calculated accordingly. Now you have to ask for the breakup of these other current assets. Okay, just like that they can't put a huge figure on other current assets. Then insurance details. Check the the insurance policy is in force, and make a mention in the process note. What is the policy number? What is the due date? What is the sum assured? All this you make a mention in the process note. In case of consortium accounts, make a note of the existing and proposed sharing pattern. This will be discussed in the consortium meeting. What is the proposed sharing pattern each bank is going to take up? Please make a mention. Non-fund limits, then you have to provide this as a separate assessment. PC, in case of PC, you have to find out what is the export turnover out of the total turnover. Okay, and you have to ensure that the PC drawals are commensurate with export turnover and export orders on hand. Okay, then industry assessment has to be conducted. What is the demand position? What are the challenges this industry is facing? If possible, if you get the data, you can make a interfirm comparison, preferably with of the same size. Okay, in case the data is available, that you can do. Then if there is any request for issuing NOC for seeding charge on securities, you have to calculate the dilution of security, because a seeding charge on securities will result in your bank's security coverage being reduced. So you have to calculate the dilution of security. So that information will be useful for the top executives to take a call on the whether to consider the request for seeding charges favorably or not. Okay. Then there are various charges from a credit point of view, right? So if there are any pending issues, any of the charges are not collected, you have to comment in your process note. These charges could be processing charges, right? If there is any pending processing charges that are pertaining to either last year, say last year renewal, or any subsequent request, if there is any pending processing charges, you have to comment on this. Usually this processing charges is bank specific. It varies from banks to bank, right? Say for example, say for every 1 lakh, so bank might stipulate working capital limit, say 500 rupees for every 1 lakh. So if it's a 1 crore proposal, they'll charge 50,000, for example. Another bank might charge another, and for fund based it could be different, fund non-fund based it could be different. So please check your applicable process charges for your bank, and make it a point when you're getting a proposal, especially in working capital, whether last year's working capital processing charges were collected, right? Okay, and every now and then it's a good practice, right? Every now and then, when I say every quarter, so every quarter you can take an exercise. What are all the sanctions that is done during this particular quarter? What are all the sanctions? Say 10 accounts are sanctioned. What is the fund based limit? What is the non-fund based limit? And what is the applicable processing charges? And then you can see in the CBS itself, in the core banking, whether the applicable processing charges were debited or not, right? In the CC account. So any pending accounts where processing charges are not required can be followed up. Okay. So if the proposal which you are taking up right now belongs to a category where the processing charges were not collected, you have to make a note of it in the process note. Okay. Then recovery of upfront fee, right? This is for term loans. Usually it's charged on a percentage basis, right? Say 1% of the term loan or 0.5%, right? Concession might be given for large customers, right? If this is pending, you have to make a note in the process note. Then non-recovery of additional interest for ad hoc limits. Usually ad hoc limits carry additional interest. Say the applicable rate of interest is 12%. Ad hoc limits, we discuss what ad hoc limits is. Ad hoc limit is, right? It's an enhanced limit for a short period of time, say 3 months or so. Usually it carries an additional percent of 2%. So whether the additional interest is recovered or not, right? Non-collection of inspection charges on term loan accounts. This is the annual inspection charges. Non-collection of pre-closure charges. Normally banks stipulate pre-closure charges if the term loan is closed before the tenure. Say the tenure of the loan is 7 years, right? And say the company has prepaid it in 4 years. So on the prepaid amount, bank might charge some penalty, say 2%, right? That will be a prepayment charges. There's a logic why banks do this, because the bank's funds flow, the ALM, right? There's a liability mismatch comes into picture here. Banks have borrowed funds from somewhere, right? The deposits are not the only source of funds for bank, right? Like your deposit accounts, like savings bank and current account, are not the only source of funds for a bank. There are other sources, other borrowings. So the bank has borrowed funds from the market, right? Raised the funds with the intention, with the idea that, with the intention that the company need not repay these external borrowings within the 7 years period. So suddenly you come and close it, the company will be having excess funds, flush funds, right? So if those funds had the bank known this before, it would not had raised that money, right? Your loan might be a small amount, but think of it from the overall bank point of view, right? So many customers do this. So many customers prepay the loan, right? The bank has arranged funds, company has arranged funds, borrowed funds, company has lent funds. This lending and borrowing in both directions is based on a set of assumptions, right? How much funds are available at this point of time, so much repayment are going to come, so many loans are to give. And then if those plans are upset by prepayment or any other such similar events, it will be a blow on the ALM. So company banks usually charge a prepayment charges, and if that is pending, you have to make a note from the process note. Okay. Then non-recurring commitment charges for underutilization of working capital limits, usually it's around 75 to 80%. If the company doesn't utilize the working capital limit to the extent of 75 to 80%, depends on the bank, then there will also be banks will be levying what is known as a commitment charges. Then non-collection of check returning and other charges. All these charges, any charges if they are pending in your renewal proposal. A renewal proposal is a time to not just assess the limits, not just to fix the limits for the coming year, but also a review. It is a review, right? And review should be comprehensive. You should take the file, and for the last 1 year, what is all the entire correspondence, what are the inspection reports, what are the pending issues, stock receivable audit, inspection reports, stock and audit, receivable audit, stock and receivables audit report, action of charges, everything you have to review, because this is the time to catch a borrower. Once this renewal is gone, your next review, that's the next year renewal, the processing officer will be looking only at the recent 1 year, and everything beyond that will be gone. So every 1 year you have to ensure that there is no pending issues, and if there is any pending issues, at least make a note of in the terms of conditions, right? The company has to pay these collection charges by so and so, right? Because in the sanction report or the process note ensures that they are kept track of. Okay. In credit monitoring, well, this is not a book on credit monitoring, as I think I had told this earlier. This book is concerned with credit appraisal only. Actually, there are two stages in credit, right? One is the pre-sanction, that is the what we are dealing with now, credit appraisal. But post-sanction, there is a very important aspect of credit monitoring. In fact, this is more important than credit appraisal. A strong credit monitoring will ensure that the account is healthy. Okay? So periodical monitoring of accounts ensures that the early signals, the warning signals are picked up early, and then you can take corrective measures. If you don't catch them at the early stage, right, the account it will be too late to want to correct the account, and the account might slip into a NPA category. So what are the various monitoring aspects? Well, this is a very brief overview of monitoring. It's a book in itself, right? You can write a separate book on it, right? But monitoring, we'll briefly discuss what are the various monitoring mechanisms we can employ. One monitoring obviously is on the financial performance area. See, once limit or sanction, what you have to do, you have to monitor, say for example, the sales performance based on every month MSOD statements, and then you have to check whether the cumulative sales up to that period. Say for example, you are taking the MSOD of June MSOD. So for 3 months, April, May, June, 3 months turnover, what is the cumulative total of the 3 months turnover? You have to check and ensure that whether it is in line with the projected turnover. Say the projected turnover for the whole year is 400 lakhs. So you would expect at least to be around that range for the quarter, for the 3 months to be around 100 lakhs. If it is 85, 90, it's okay. Anything about that. If it is less, say 70, less than 70, that will be a signal that the company might not achieve the projected turnover. And your limits are fixed based on the projected turnover. Remember that, right? Your entire assessment of working capital limits, MPBF, your fixing of the sanction limit is based on the assumption the company is going to achieve the turnover. And if the company doesn't reach the turnover, there's no point in having that limit. Okay, so you have to monitor the turnover. Then is also a good practice for insisting on submission of the provisional balance sheet every 3 months. Now, provisional financial statements are not audited. That company gives a tentative figure, but even then, it's a good practice to insist on submission of the provisional balance sheet every quarter, because you'll be in a better position to track the NWC and other key ratios. Okay, because if you wait for the balance sheet, it will be one full year. Provisional balance sheet will give you a good idea in the interim period. Then all your financial indicators should be compared with the projections submitted at the time of the last renewal. See, projections can always be rosy. Projections will always be rosy. The company will say, will achieve so much turnover, NWC is going to improve, and so, all ratios will be so and so, right? But they should be judged against the actuals. So when a proposal comes for your renewal, last year renewal, what is the projections? What are the sub projections submitted by the company? And what is the actual performance now? That is something you should always do, right? We've also discussed this in one of the case studies earlier, right? This is something you have to always do, the comparison with the actuals and the last time projected financial figures, not just turnover. Most of the many important parameters such as your current ratios, current ratio to LBT and NWC and all this. Okay, and sometimes turnover report it is different in various papers submitted by the party. Right, the various reports coming into the bank, right, by the party. Balance sheet is just one document, but there could be MSOD, the sales tax returns, okay, excise duty challans, QoS, FFR, right, various inspection comments, if it's a big company or press releases. So the various documents that as a banker will be having access to, and should not be any inconsistencies in the data submitted. Right. Say for example, the sales as per balance sheet is one figure. Right. Say for example, or the stock as per the stock statement is one figure, whereas as per the balance sheet is some other figure. These inconsistencies mean that the company is taking you for a ride. It's basically to obtain higher DP or to get the limit sanction. And you should be careful about those sort of customers. And those sort of borrowers you have to be very careful. So you should always have a habit of comparing, comparing figures submitted by the same company through different papers, right? And checking for any inconsistencies. As a credit officer, it is very important for you to keep abreast of the latest developments in the particular industry. Usually, credit officers are allotted based on the industry. It's a big setup like a zonal office or a head office. So you'll be allotted to a industry like a steel industry. You look into all steel accounts, or you look into all rice mills, agricultural. Like you'll be allotted. If this is the case, you have to be very thorough in the particular industry which you're dealing, and you have to keep abreast of all the industries. If not, if you are handling many accounts of different industries, then it's a bit difficult. But at least have at least have a grasp on the latest important developments in the key industries, right? Because the end of the day, appraisal we discuss is not just about financial appraisal, right? Your appraisal is not just financial appraisal. There is only one part. We have the technical appraisal, managerial appraisal, industry appraisal. All this put together, you'll be taking a holistic view. The sanctioning authority will be taking a holistic view based on these various appraisals. This is only one part. Those are the major parts, but the credentials of the management comes into picture. Yeah, the technical aspects, the project, industry appraisal. Sometimes banks are reluctant to take exposure in particular industry because it's not doing well. Real estate is a very good example. Sometimes during certain periods, banks will not be going for real estate. Then there are some industries that are not doing well. Say for example, say paper industry or petrochemical industry exposure has reached the ceiling. So you need to be aware of what are the adverse market developments in the particular industries, and then take a view, and then while sanctioning you have to consider those developments, because adverse developments can actually the company plan of action, and the projected financial performance might not be achieved. Okay. Then also you should know the sources from which the promoter's margin is made. Right throughout this course, you have been insisting on the importance of the promoters bringing in the margin. Now, if the promoters now, it's not just important to get the promoters to bring the margin, also important to keep an eye on from where this margin is coming in. Now, you need not dash off an official letter say asking where did you get this money, but if possible, try to engage the company staff who comes to the bank. There'll be some a staff from the company side who regularly visit the bank. They'll be having a lot of access to information. They'll be having a lot of information on the sources. So just try to strike a conversation informally, in a discreet manner. Try to ascertain what are the sources from which the promoters are getting the margin. Okay. And then if there's an abnormal increase in data secretors, you need to dig deep. There could be two sides of it. Why high data might actually be required in view of the competition because everybody is offering, you need to offer. Maybe that's the reason. Or it could be a case of delayed realization. Maybe the data are not paying. Similarly, the case of Cretas. The Cretas could be high because everybody wants to bank with you. Everybody wants to do business with you. So every of your suppliers are supplying you and giving you a lot of credit. That happens if you're a very periodic company. Or it will be a case with the long-standing data, long-standing creditors. You are not paying. The company is not paying to its creditors. That is a negative scenario. So if there is an abnormal increase in either data or creditors, you need to inquire the reasons for it. And the balance sheet should not be qualified. This is something banks keep insisting, but somehow this is never done. The chartered accountants who furnish the balance sheets always have a caveat. This financial statement is prepared as per the books of the accounts placed before me. Such qualified statement should not be accepted. Then informal discussions is a very important. Your official correspondence is one thing, but having informal discussions with the company and the company staff is something you're going to get a lot of information, right? Especially at the branch level where you'll be interacting with the borrower on a daily basis. You'll be knowing many of the company personnel. So the credit officer who is actually dealing with this particular account, need to have frequent informal discussions. Need not be formal, right? Just be informal, casual. Casual conversations can reveal a lot of things. What it usually gives you is if there is a specific problem being faced by the company. The conversations with the company management will give you a lot of idea. So this could be related to the market trends. Okay, it could be of the price movements, whether there's any, or it could be demand. Demand may be stopping suddenly, or some government policies that are affecting this industry. Right, these are the issues that you can obtain from the company itself. Also, be careful when the borrower tries to avoid bank offices and doesn't answer the phone calls. This usually happens with accounts that are turning bad or about to turn bad. When the borrower willingly tries to avoid the bank officials, you need to watch out that customer carefully. You also have informal talks with other borrowers engaged in the same line of activity, because there will be a great source for any adverse reports about this borrower. If everybody is in the same industry, they would usually be knowing about one another, right? And it's a small town or city. In fact, even if you're not from the same industry, you'll be knowing about a prominent businessman. So try to keep if there's any particular account that is bothering you, right? Off late it is not they're persistent overdues, the performance is not good, there are no operations in the account. Off late, right, in the last 2-3 months, you have a doubt about this account, it's not doing that well. Just try to inquire from companies who are engaged in the same business, same industry. It need not be the competitors directly, but in a related line of activity. You'll be surprised to know that in many instances they'll be knowing about the reasons for this performance, for the low performance, right? And as I said, the office peon or the staff of the company who comes for the branch for checks and daily transactions, they'll be having a lot of information, talking to them regularly. Sometimes they themselves tell, these office personnel tell that our promoter is not showing that much interest in the business as it is. He'll be telling that he's not coming regularly to the office, or when you get that sort of information, it's a sure signal that something is going wrong. Okay. Now also try to know who are the major customers of the company. Are they just 2-3 buyers on who the company is dependent? This you can in a way get from the data statement. There's the outstanding receivable statement, but in a way informal discussions also reveal this in a big way. Reveal this. Okay. This is not a good case. For all that we know, this could be group companies. So you don't want to be financing to this sort of a company. So just try to inquire who are the major customers of the company. Also doesn't harm to know who are the major raw material suppliers, and whether the terms the company is having with these debtors and creditors is good. That also you can inquire from these informal discussions. Then operational issues, most important. In fact, as a banker, you need not talk to the management. You need not talk to the competitors, market opinion. You can just gauge the health of the account just by looking at the operations. New company, okay, you don't know anything about the new company, so you need to talk to the market, get the market opinion. But 1 year is good enough period. 1 year when you have the account operations, when you take the account statement for the last 1 year, that will be good enough to tell what a borrower is. But only for new borrowers you have to resort to market opinions. You rely on other person, your field level investigations. But operational issues, if the account is in operations for 1 year, that's good enough for you to tell what sort of a borrower he is. The operational issues. What are the operational issues you can look in? Is the account being operated regularly? Sometimes you'll see the account is not at all operated regularly. There'll be brief periods of activity, and then there'll be lull period. Right? Then whether the account is dormant from the entire previous month. You'll see these accounts. This sort of accounts you'll see in as you keep doing proposals, you'll see this. There will be accounts where for the entire 1 full month there won't be any activity. Total inactivity, zero activity. And there will be accounts where the turnover is not at all related to the limits availed. Company will be valuing some limits running into lakhs and crores, whereas the turnover will be so nominal. Then of course in terminals you have to see the overdue portion and keep checking whether the borrower is facing difficulty in repaying the installments and the interest. And if possible, also always try to have unit visits. It might be time consuming in a busy branch with a lot of advanced accounts, with the daily work. Frequent unit visits as per the schedule might not be practical, but at least in units which are not doing well, right? Unit visits is a great way to know about a lot of things. Like for example, labor issues, for example, production issues, stock. What is the quality of stock, nature of stock, the labor relations, how is the machinery being maintained, all this you can find from the unit visits. Okay, and if the turnover is being routed to the account is poor, this you can get from the credit submissions. If the company is not routing entire turnover to the account, right, compared to what the turnover that you can get from the P&L statement. So the P&L statement says the turnover account is 200 lakhs, whereas you take the account, this is for the full year, okay, say 13-14 financial year, and during this period you see the credit submissions in the account as per CBS, say for example is only 70 lakhs, what means the entire turnover is not being routed to the bank. So where is this turnover going? So is the company maintaining other accounts with other banks? This you have to inquire. These sort of information you will be getting from the operations, from the CBS. So keep an eye on the operations during the last 1 year. In consortium accounts, company need not route the entire turnover, but at least the pro rata share should be routed. Say for example, your share in the consortium is 20%. Total turnover of the company is 1000 lakhs, 10 crores, right? If your share is 20%, at least 200 lakhs of turnover the company should be routing. So then you match up this figure with the credit submissions in your account, right? And see whether the company is routing the entire turnover or not. Okay. Sometimes companies might be having an operating account, or even collection account with other banks. Okay. Such accounts you have to you should insist that those accounts are closed immediately. Okay. Sometimes companies might get the permission from the bank to operate such accounts. Very specific cases like for tax purposes or some particular statement. In that case, what you have to do, you have to get the monthly statement from the bank and see that the only the account is being operated for that purpose, but the specific purpose for which it is permitted. Okay. Then frequent returns of checks, frequent returns of bills you have to see, and then are there bills negotiated which are outstanding after due date. All this point to the discipline in the account, and whether checks are issued as a purpose not related to the main activity or non-business credits. So all this information you have to keep tracking of. I'm not saying you need to do this daily. It's not practical. You can't do it every week. You sometimes you not be able to do it even every month. But at least at the time of renewal, when the account comes, you do a proper job. You have to make sure at least most of these issues you are addressing in your process note. If there are any deviations in this list, at least you have to flag it off in your process note. Then other stretch of many months where there are no credits in the account. Just now we discussed there will be accounts where for the last one full month there are no activity. But there will be some accounts where there for 2 to 3 months, stretch at a stretch there will be no credits. Then there will be accounts where there will be large cash withdrawals, right? Usually you don't want this, right? As a bank you don't want this large cash withdrawals. You want only most of the transactions to be routed to checks. Okay, so large cash withdrawals. Also whether drawing power is sufficient, right? Periodic inspection of stock and unit visits. Frequent reasons for excess drawals, right? Sometimes companies keep asking excess drawals and banks will be routinely sanctioning it. That's not a good practice. Banks will be having a limit, like say during the one full renewal period for the 1 year, maybe bank should not sanction more than 6 times excess drawals or 3 times ad hoc. They might be having a policy. Some companies will be regularly utilizing this and maybe even exceeding it. Even if not exceeding it, they'll be taking full advantage of this facility. It points to two things. Either it could be faulty assessment on the part of the bank in not sanctioning the required limit, or any fund is not sufficient for this company. Are these entire funds in the business or going elsewhere, right? So frequent excess withdrawals you have to carefully monitoring. Continuous utilization of working capital limit at the peak. Say for example, the limit is sanctioned is 200 lakhs. You see the outstanding balance for the last 30 days or last 60 days. You will be finding some accounts where outstanding is always above 190. Always above 180. It's not a healthy account. If the company frequently is at the brim, 200, it goes to 205. Again, some credit comes, it drops to 190. It drops to 190. Again, goes up to 200. Shoots up to 210. Again, drops. If it's operating consistently around that limit, it never comes down. No, that is not a healthy sign. You want a healthy account. What is a healthy account? Healthy account is where the limit is 200. You want the company to utilize 200, right? But there should also be credits coming in, right? So it'll drop to 170, 150. The company, it might again go up to 200. There should be healthy inflows, healthy credits into the account. If the only credits which are coming into the account is to avoid the limit being exceeded. Say for example, it is 200 and it has gone up to 205. Then the credit is coming only to drop this below 200. Say 195. A company has got a 10 lakh credit only to bring this down, and again it starts utilizing it. Again it issues checks 1 lakh, 2 lakh, it goes up to 196, 188, 200. Again, because the bank will not allow operations beyond 200, again some credit comes, than 5 lakhs. So consistently it is operating around that 190, 180 mark. Are you getting the point? The credits are not genuine credits. These are not sales credit. Right? So continuous utilization of the working capital limit near the brim, near the maximum limit is not a good sign. Okay. Then with the diversion of funds is happening, we've seen how to track this, and whether are there any large transfers to one particular company, one particular account periodically. Some in some accounts to one particular party, there'll be a lot of payments, periodic payments. And what if that company happens to be promoted by a director of this company? Are these genuine transactions, right? So those you need to take care of. Whether long credit period is being offered to customers, right? Frequent involvement of LCs and vacations of BG is not a good sign. Is the terminal installment interest being serviced from the working capital account? That is also not that's not encouraged. From the operations of the account, you can derive a lot of information. This actually will be if you're in the controlling office, may not you may not be having access to all this information because you're not seeing the account daily. But at the branch level, definitely you'll be knowing what are the operations of the account. Because day in and day out, you'll be issuing checks. Especially the branch manager, you'll be having a pretty good idea as to what are the sort of transactions the company is dealing with. What is the flow? What is the flow? Is the continuous flow or intermittent flow? What sort of transactions the company is doing? Who are these major customers to which the checks are being issued? At the operational level, the branch level will be having a lot of information. So credit officers at the branch level need to be more diligent in monitoring the operations of the account. Then scrutiny of reports, right? So the various reports as a credit officer will be getting access to. One is the stock and receivable audit report. So once you get the report, don't just file it, okay? Or don't maintain a register saying the company's name and stock and receivable audit received. No, it's not just that. It's not about receiving, okay? It's about review. Now, as soon as you get the stock and audit receivable audit, you have to review it, and adverse features should be pointed out. You have to put just a one-page note. Just put a one-page note to your higher up authority. So and so account stock and receivable audit is received. These are the points that are highlighted by the auditor. The points which as a banker you need to take up. Okay, and then you have to dash off a letter to the company or the branch, saying these are the adverse points mentioned in the report, and advise the company to rectify it. So in stock and receivable audit, there will be information on various items such as the quantity of stock, whether DP is sufficient, the quality of the stock, old obsolete stock, slow moving stocks, and also the valuation methodology. What is the method of inventory valuation to arrive at this stock value, whether it's LIFO, FIFO, the age of book dates, because the stock and receivable audit, the quality of receivables will also be commented upon. Age of book dates, whether any data is constituting a significant percentage of the total data, so it's a very important customer. Then accuracy of the stock statements, everything, insurance details, right? All this information you get from the stock and receivable audit. The banks also insist for quarterly certification of book dates, right? Though there are many frauds in this aspect. For example, in one case, a company's data are only 8 numbers, only 8 data, and all the sales of the company are respect of these 8 companies only. And later inquiries reveal that out of the 8 companies, 7 are created by the promoter to the intention to divert the funds. So these sort of things really happen. That's why if your debtors, the list of debtors, a particular one or two debtors constitute a major portion of the total debtors, you need to be extra careful. Then if the project is under implementation, you have to be very careful, because this is the stage where the project needs to be monitored very carefully. So periodic certificates you have to get from the independent professionals like chartered accountants regarding the funds inflows, how much the promoters have brought in the funds, how much funds the promoters have pumped in, right? And from the engineers, what is the status of the progress, right? And approvals, especially the status of approvals, and all this you have to take care of, which we have already discussed in the chapter on project appraisal. Okay, so keep an eye on that, and follow major irregularities pointed in the inspection reports. Well, there may be various reports, various inspections conducted in every account. It's not just the internal inspections. There will be statutory audit, concurrent audit, stock audit, RBI inspections also happen sometimes, right? So what are the list? There should be a list of points you have to. So all these points you should bring it back into your process note. Every process note in every bank will be having a item for inspection. What are the comments and what is the rectification? And don't skip this. Okay, what happens in most cases is only those items which are rectified you'll be mentioning, because uncomplied points again you'll be getting a query from your zonal officer head office. So what you do, you conveniently skip this, and only which are rectified or which are minor points listed. Don't ever get into that sort of habit. This will have serious repercussions, because always think what happens is the account goes bad, and then because then it will be interpreted as you didn't bring you're aware of the facts, but you didn't bring it to the notice of the sanctioning authority. So never get into those sort of issues. Okay, so what is the worst that can happen? If there's a pending issue in the pointed out in the inspection report and it's not complied, just state it. What is the worst that can happen? You're not going to be thrown out of a job, right? You'll get one more letter, that's all, rectify it, and you will you'll pursue the party. Don't hide anything. Especially inspection reports, they're very very important, because always think from the point of view when the account goes bad, everything will come back to haunt you. Now then you should not be held responsible. So if there is an inspection report is not rectified in your process, not mention it. There's nothing wrong in it. Okay. And also it's a great time to catch the borrower, because when the borrower comes for renewal or enhancement of limits, this is the time to catch the borrower. He whatever you say, he'll be listening. Other time, normal time, you tell him this is pending, he will not attend it. But at the time of sanction of limits, you ask him, he will get it done. This is the time to also rectify all the pending issues. Okay. Then exchange of information. This we discuss in case of consortium. Multiple banking accounts as per RBI directive. The banks have to engage in this exchange of information. Then insurance, whether the stock and also the collateral securities, all the properties and all, whether they insured, whether the sum assured is adequate, and also what is the due date of the policy. Then submission of other returns, stock statements need to be analyzed closely. Okay, MSOD in particular, you have to track the whether the company is likely to achieve the projected turnover or not. Okay, and whether the production is below the capacity, and whether is the company manufacturing a product that is not normally done. Okay, it's not that you should not do, but it might be a case for genuine order, but you need to inquire the reasons for it. And if the MSOD is really and if the MSOD is reflect low turnover, you have to inquire what is the reason, whether it's due to any labor strike or not, or is there a frequent breakdown of machinery. All this you have to look into. QoS is a quarterly statement, sometimes half yearly. Two QoS are there, right? QoS2 and QoS3. The certificate of compliance. Now all these returns you have to ensure at the time of the submission of the process note. You commented in the process note. All these are inquired. And if there are any pending compliance to last year's sanction, you have to point them out. Okay, and analysis of balance sheet and latest provisional balance sheet. Then auditor's comments in the audited balance sheet. Where is statutory reduce? So pending statutory reduce, just make a mention of in the process note, and then you can follow it up in the sanction conditions. And when you see the quality of reports being submitted by the company over a period of time, you get a feeling. You will be having gut feeling as a credit officer whether the records made by the company are trustworthy or doubtful. Companies can fudge figures, except for the balance sheet which are audited. Even there is scope for collision, but at least it's done by independent professional. But other statements submitted by the company, usually there will be level of some fudging. Now, as a credit officer, over time you will be getting a very good idea of which sort of a customer, which company is what type. You will get the gut feeling just by seeing the quality of the reports and the inconsistencies. You can make out whether the company is doing is furnishing is correct information or not. Right? Then you can deal with the company accordingly. Okay. Then credit investigation is a very important aspect, because banking channels are being used these days by unscrupulous individuals to finance anti-social activities. Even money laundering being done through banking channels. So it's very important that you conduct due diligence properly, especially in respect of new borrower. The antecedents should be thoroughly investigated, right? Your field level inquiry should be top class. You should ensure that there is no laxity in this aspect. Okay. So usually banks insist on reference for introduction for new customers. That is good practice. Okay. The first step in a credit appraisal should be the personal interview. Right. This will give you the opportunity to get first hand information. Just by talking to the customer, sometimes you'll have a lot of information. What sort of person he is. You'll get a feel of the person. Okay. You're comfortable with the company or not, the activity. Okay. And that's why you have to place a lot of emphasis on the personal trait of the borrower, integrity. In fact, there are cases where even the business fails and doesn't generate sufficient funds, borrowers with integrity will repay you. I'm sure you might have come across these sort of situations where the business is dull, they're not getting sufficient funds, they can't repay the installments, but still they arrange funds from somewhere, even from their personal sources, and repay. Now, those are the sort of borrowers you want to deal with. Okay, so you should place a lot of importance on the integrity of the borrowers. And in an interview, make the applicant speak as much as possible. Okay, you stay silent most of the time and let him speak. Get to know about his background. Which place he hails from, where he grew up. What are the contacts he has. What is his education, his prior experience. What are the businesses, the companies he has floated in the past. What are they doing now? Are they still in existence? Get their financials. Talk to their bankers. And what is the industry general? What is the industry in general is like? So what are the challenges the promoter feels are facing the industry, and how he is going to address them. What are the sources of his funds, what the profit he is expecting from the business, what is the competition he is expecting from the business, what are the securities, whose name they are, from where he is going to get his margin, what are the pending approvals, orders on hand, everything. Make the applicant speak as much as possible, try to get the maximum information. and that will reveal a lot of gaps. If the project itself has any gaps, it will usually come out in it will usually be coming out from the mouth of the promoter himself. Then you can ask him how he's planning to mitigate those factors. Okay. Then after interview is done, then you go on and make market inquiries. You go to his IT returns, you talk to the you talk to his competitors or other persons who know him, who knows his business side and also personal integrity side, and try. And also look into the reports, various reports, various defaulters lists submitted by provided by RBI CIBIL reports. Check whether there are any adverse report of the borrowers. And if the borrower is an existing customer of the bank, then obviously you're going to scrutinize the past operation. That will reveal a lot. We told you that, right? We already discussed this. 1 year operations is good enough to tell you about the company and the promoter. So that alone is sufficient whether you want to another company promoted by the same promoter or not. So with that, we come to the end of the segment. This segment is basically a checklist for the various points you need to look into when you start a proposal. It might not be practical to ensure that everything is attended to in your proposal because you'll be having a time limit. Sometimes your higher ups come and just ask you to put up this proposal in so many by evening or the next day. It could be a huge proposal and there'll be a lot of pending issues. Now it might not be possible to ensure that everything is complied with. Ensure that as far as possible it is done. Most importantly, the pending issues you should not forget them. Don't ever let them go off the air. Okay, they should come back into your process in the form of terms and conditions, so that there'll be continuity. Okay, so in the next chapter, that will be a last chapter of this course. That'll be the last segment. We'll be discussing some additional resources where you can get information on the process of credit appraisal, some books which you can make it into your reading list, right? Another concluding comments. Okay, so see you then.